For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Right now, investors are facing a unique moment in the market where short-term fear is creating long-term opportunity, especially in the artificial intelligence space. Two hypergrowth artificial intelligence stocks are emerging as standout candidates to consider during this ongoing sell-off. These companies are not only expanding at an incredible pace, but they are also doing so while maintaining strong profitability, which is a rare combination in high-growth sectors. So far this year, weakness across technology stocks has weighed heavily on the broader market, pulling down the S&P 500 by roughly 4%. However, this decline does not necessarily signal the end of the artificial intelligence boom. In fact, the long-term outlook remains extremely bullish. Morgan Stanley has forecast that global spending on artificial intelligence could approach $3 trillion by 2028. Even more importantly, more than 80% of that spending has yet to occur, which suggests that we are still in the early innings of this massive technological shift. This macro backdrop provides a strong foundation for why leading artificial intelligence companies continue to report powerful demand trends. Even in the face of market volatility, businesses and governments are continuing to invest heavily in artificial intelligence capabilities in order to remain competitive. As a result, this creates a compelling opportunity for investors who are willing to look beyond short-term price movements and focus on long-term growth potential. With that in mind, let's dive deeper into two high-powered artificial intelligence stocks that could benefit significantly from this trend and may be worth considering while their valuations have pulled back. Starting with Palantir Technologies, the stock has experienced a decline of approximately 28% from its recent high. While that drop may seem concerning at first glance, it is important to understand what is happening beneath the surface. The company is actually seeing accelerating demand for its artificial intelligence platform, which is becoming a critical tool for both commercial enterprises and government agencies. This platform is designed to connect data, decision-making processes, and operational execution in real time. By doing so, it allows organizations to integrate advanced artificial intelligence models directly into their daily workflows. This is a key differentiator because many artificial intelligence solutions remain theoretical or difficult to implement, whereas Palantir focuses on making these tools practical and actionable in real-world environments. As this technology continues to gain traction, it is translating directly into high-value, long-term agreements with customers. These agreements not only provide consistent revenue streams, but also strengthen the company's position within its clients' operations. Over the past year, Palantir delivered impressive financial results, with revenue increasing by 56% to exceed $4.4 billion. Momentum accelerated even further in Q4, where revenue growth reached 70% year over year. This surge was largely driven by a dramatic increase in United States commercial revenue, which jumped by 137%. This level of growth highlights how quickly businesses are adopting Palantir solutions as they seek to unlock the full potential of artificial intelligence. One of the most important aspects of Palantir's business model is its competitive advantage, often referred to as a moat. The company excels at helping large organizations transform artificial intelligence models into tangible financial outcomes, such as cost reductions and increased profitability. Once its software is integrated into a company's daily operations, it becomes deeply embedded in the organization's infrastructure. This deep integration creates high switching costs, meaning it becomes both difficult and expensive for customers to move away from Palantir's platform. As a result, the company benefits from strong customer retention and long-lasting relationships. These factors contribute to its ability to generate substantial cash flow, with roughly half of its revenue being converted into free cash flow. Of course, it is important to address valuation. Palantir stock currently trades at elevated multiples relative to both its sales and earnings. This means that investors are paying a premium for its growth potential. However, if the company can continue to sustain its current trajectory of strong revenue expansion and high margins, that premium could be justified. Looking ahead, analysts expect Palantir's revenue to more than triple, reaching close to $15 billion by 2028. If the company achieves this level of growth, it would reinforce its position as one of the leading players in the artificial intelligence industry and could potentially deliver significant returns for long-term investors. Now, shifting over to the second company, Taiwan Semiconductor Manufacturing Company stands as a cornerstone of the global technology ecosystem. It is widely recognized as one of the most important and valuable companies in the world due to its critical role in semiconductor manufacturing. Taiwan Semiconductor Manufacturing produces advanced chips for some of the biggest names in technology, including Apple and many other leading semiconductor designers. These chips are essential components in everything from smartphones and personal computers to data centers semiconductors and artificial intelligence systems. Over the years, the company has consistently delivered strong performance, benefiting from the growing demand for semiconductors across multiple industries. This demand has only intensified with the rise of artificial intelligence as more computing power is required to train and deploy advanced models. What truly sets Taiwan Semiconductor manufacturing apart is its dominance in advanced chip manufacturing. The company operates at the cutting edge of technology, producing some of the most sophisticated chips available. Because of this, its customers are often willing to pay premium prices in exchange for its unmatched expertise, reliability, and scale. In its most recent quarter, the company reported revenue of $34 billion, representing a 25% increase year over year. Additionally, it achieved an operating margin of 54%, which is exceptionally high for a manufacturing business. This level of profitability highlights the company's strong pricing power and its irreplaceable position within the semiconductor supply chain. Another key advantage for Taiwan Semiconductor manufacturing is its relationship with major cloud service providers. Many of these companies are heavily investing in artificial intelligence infrastructure, and they rely on a steady supply of advanced chips to support their operations. However, securing enough semiconductor supply has become a significant challenge, creating a bottleneck in the expansion of artificial intelligence capabilities. This situation works in Taiwan Semiconductor manufacturing's favor as it provides the company with clear visibility into future demand. With customers actively competing for limited chip supply, the company is well positioned to maintain strong pricing and continue expanding its revenue. Management has indicated that it expects annualized revenue growth of 25% through 2029. Even more impressive, revenue specifically tied to artificial intelligence chips is projected to grow at a rate exceeding 50% per year. This highlights just how central the company is to the ongoing artificial intelligence revolution. Despite these strong fundamentals, the stock has declined by approximately 13% from its recent highs. This pullback may present an attractive entry point for investors who are looking to gain exposure to the artificial intelligence sector through a company with a proven track record and a dominant market position. At a valuation of around 24 times this year's earnings estimate, Taiwan Semiconductor manufacturing offers a more balanced combination of growth and value compared to some higher-priced technology stocks. This makes it a compelling option for investors seeking both stability and upside potential in the rapidly evolving artificial intelligence landscape. Taking a step back, both of these companies represent different but complementary ways to invest in the future of artificial intelligence. Palantir provides exposure to the software side of artificial intelligence, focusing on data integration and real-world application. Meanwhile, Taiwan Semiconductor manufacturing offers exposure to the hardware side, supplying the advanced chips that power artificial intelligence systems. Together, they highlight the breadth of opportunities within this space and demonstrate how artificial intelligence is transforming multiple layers of the global economy. While short-term market volatility may create uncertainty, it also opens the door for long-term investors to accumulate shares of high-quality companies at more attractive prices. As artificial intelligence continues to evolve and adoption accelerates across industries, companies that are positioned at the center of this transformation could see significant growth in the years ahead. For investors who are willing to stay patient and focus on the bigger picture, this current sell-off may ultimately prove to be a valuable opportunity rather than a cause for concern. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.